Ladies and gentlemen, Greg Mikulowski at ForexLive.com. I'm going to take a look at the Euro versus US dollar deep dive. We take a look at the daily chart, take a look at the hourly chart, especially as we head toward the close of the current week and into the new trading week. What levels are key? Where are your risk defining levels? What are the biases? What are your targets? So all that's going to be talked about in this video. So let's get started. Let's start by taking a look at the daily chart. If we look at the high price that we saw in the month of July to the low price that we saw in the month of October, the 38.2% retracement comes in at 1.07642. And as you can see on trading on Monday, the price moved up toward that level. In fact, we got within about 7 or so pips of that 38.2% retracement and then started to rotate back to the downside. So as a lot of people know, I'd like to see a trend move followed by a corrective move to, if the buyers are to take more control, to get up at least above the 38.2% retracement. If they can't do that, guess what? The buyers are not winning. The sellers are winning. And that's what we saw in trading here this week. The sellers starting to win again with the push to the downside. Now, the next target on the downside off of this daily chart, I'm going to be focused a little bit on, or focused on this 1.0635 level. That level corresponds with this low price going back to the end of May here before the market moved to the upside. So pay attention to that level going forward. As the price moves below that 1.0635 level, it should open up the door for further selling pressure. This area right down here, which was broken in the early October, but only for a day or so before the market started to move higher, and then we started to reestablish support against this swing area. But you can see the number of different times that the market either found resistance against that level or support, mostly support in this here. So this is a big floor for the Euro versus US dollar. It comes in at 1.0483 up to 1.0533. We're still a long way away from that, or a ways away from it, but as you can see earlier in the month, we were in that area, so it's not wouldn't be out of the question to break the 1.0635 level in trading next week and then move down into this swing area, or go a retest of that swing area, especially since we couldn't get above the 38.2% retracement. But for now, let's watch this 35 level. It may just be that we went up to the 38.2, came back down to a support level, and are basing to move higher. If we do get above the 38.2% retracement, however, be aware that the 100 and 200-day moving averages are pretty much sitting right on top of each other near the 108.05-ish type area. So be aware of that level as well. The key tactical bias defining level for all traders, whether you're buyers or sellers. Sellers can lean against that and hope that the market moves lower. Buyers would want to see a break of that level and further momentum to the upside. So the daily chart is pretty clear and trading along technical levels. 38.2% retracement on the top side, 106.35, and then another swing area down here. A break above the 38.2, have the 100 and 200-day moving averages. Now, let's take a closer look at the hourly chart and see how that fits in. And if we look at the hourly chart, I characterize the market price action right now, or the winners and losers, being as neutral. Why? Because we, for the most part, stayed above the 200-hour moving average. That's rising now. And we stayed below the 100-hour moving average. That's falling now. So we're getting this divergence of the two moving averages coming in together. It'll take a little bit more time for them to converge, but the price action is in between those levels. It's Friday. The market maybe wants to take a break, wants to wait until we see what happens next week, and if we let the cards fall with either a break of the 200-hour moving average on the downside or a break above the 100-hour moving average on the upside, giving us the next momentum move in this pair. That's the technicals, how technicals are setting up currently at the moment. And if we do break below this 200-hour moving average, 38.2, maybe these lows right through here, down to around the 1.066 level, that should open up the door for further downside momentum. We'll look at this swing area right through here, and then look down toward the 61.8% retracement, the move up from this low to this high as the next targets on the downside. And of course, we do have those other levels on the daily chart to pay attention to, so be aware, be prepared on the top side. Break above the 100-hour moving average opens the door for further upside momentum in this currency pair. So there you have it, a pretty deep dive in the Euro versus US dollar. Lots of gleam from the daily chart, I must admit. Watching the 106.35 level off the hourly chart. By the way, the 35 level is right here at the 50% retracement. So now that's another key level to be aware and be prepared as we head into the new trading week. At key level on the daily chart, key level on the hourly chart, 50% midpoint. It's always nice, sweet level that if we get below, it would open the door for further downside. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.